Okay, let's just dive right in. We're looking at a company, right? Trading at $438 a share
A $1.46 trillion valuation.
and a PE ratio of nearly 300. But the final verdict from our sources, using a really strict Buffett and Graham framework, is just one word:
Avoid.
avoid. And that paradox, that's really our mission today.
It is. We have to separate the theoretical promise, this big AI transformation the report calls the metamorphosis, from the actual economic reality on the ground.
And figure out why a company with falling sales gets this kind of valuation.
Exactly. Using the 4 pillars of value investing.
All right, let's get into it. Part 1. Chapters 1 to 3. Business, management, and financials. Chapter 1. Business understanding.
So the core of the issue really is the auto segment. It's still 74% of the revenue.
And the numbers are just sputtering.
They are. Deliveries fell 8.6% in 2025, and that's the first time we've seen a real structural failure in that growth story. Meanwhile, BYD just took the lead.
Right, with 2.26 million battery electric vehicles. So that's showing up in the margins, I assume.
Oh, absolutely. Gross margins have been crushed down from almost 30% to somewhere around 16 to 18% now. It's all because of the price wars.
So is it fair to say they're performing like a legacy automaker now, but still valued like a tech unicorn?
That's a perfect way to put it. The competitive moat is basically gone. Now, to be fair, there is a bright spot.
The energy division.
Yes, the Megapack and Powerwall. It's a great infrastructure business, growing 45% year over year. But in dollar terms, it's just not big enough to plug the hole the auto business is leaving.
Chapter 2. Management evaluation.
And that leads us straight to key person risk. I mean, the CEO is overseeing Tesla, X, SpaceX, XAI, Neuralink.
The overcommitted CEO risk is at its absolute maximum.
And that volatility is a huge factor, especially when sources point to these persistent governance concerns, the feeling that the board just can't or won't check the CEO's power.
And you see that instability in their ability to execute. There was a pretty significant brain drain in 2025, right?
A huge one. The SVP of Powertrain, head of Optimus, key people left. That seriously increases the risk for this massive $10 to $11 billion a year AI spending spree they're on.
Chapter 3. Financial health.
The financials really just confirm the stall. For the full year 2025, revenue is looking flat, maybe even slightly down.
That's that double whammy you mentioned, lower volumes and lower prices.
Exactly. But the most critical piece here is capital efficiency. Free cash flow for 2025 is forecast to be 0 or even negative.
Oof.
And even worse, return on invested capital, the ROIC, has just plummeted to 7.3%.
And their cost of capital, their WACC, is what, over 10?
10.8%. So they are literally destroying shareholder value with every dollar they invest right now. They are spending money to go backward. Want institutional-grade stock research without the institutional price tag? Check out stockanalytics.ai. For just $10 a month, you get full access to our deep dive video library covering over 500 S&P 500 and NASDAQ 100 stocks, each with full source citations you can verify. Can't find the stock you're looking for? Request analysis on ANY ticker and we'll deliver it within 24 hours. Upgrade to Pro for $20 a month and unlock our SEC Risk Scanner, which detects red flags in company filings before they hit the headlines, plus our Portfolio Diversification Analyzer to optimize your holdings. Start your 7-day free trial today at stockanalytics.ai. Make smarter investment decisions with research you can trust. Part 2. Chapters 4 to 7, Market Sentiment, Ownership, Risk, and Final Conclusion. Chapter 4, Market Sentiment.
Okay, so this valuation disconnect,
Yeah.
that 293 PE ratio, has nothing to do with the reality of selling cars.
Nothing. To get to that number, you have to assume guaranteed 20% plus growth for a decade and, well, total global domination in robotaxis. It's just complete polarization. The bulls see it as an AI robotics play, so they're forecasting $600 plus. The skeptics look at the car business and see a value as low as $25.
And a standard DCF model, a more sober one, lands where?
Around $168 a share. So the market is pricing in the possibility of success, not the probability.
Chapter 5. Ownership structure.
Well, the ownership does provide a bit of a price floor. You have these massive passive index funds, Vanguard, BlackRock.
They own huge chunks, right?
Huge. And they have to hold the stock, no matter the price. It dampens some of the volatility.
But the insider activity tells a bit of a different story.
It's a real warning sign. You had the CEO's $1 billion stock purchase, which was, a confidence booster. But that was set against a backdrop of really clear, notable selling by other executives all year.
Chapter 6. Risk assessment.
The risk matrix our sources use puts two areas in the critical risk category.
Let me guess. Competition and key person risk.
You got it. BYD and governance. But the one I find most acute is the technology risk.
The robotaxi pivot.
Yes. Tesla takes on all the liability for that fleet. I mean, think about it. One single high-profile accident could ground the whole operation overnight.
And the entire AI valuation premium just evaporates. Instantly. Chapter 7. Conclusion.
So all of this brings us to a very clear verdict.
At this price, Tesla is not an investable asset. It just lacks the stability and, most importantly, the margin of safety that value investing demands.
Right. A generous look at the actual quality assets puts fair value somewhere closer to, say, 150 to 180 per share.
So that 150% gap between the fundamentals and the market price.
That's what we're calling the optimism premium. It's the price you're paying for speculation, for what might happen, not what is happening.
And that leads to the final question, really, for you listening. Do you believe you have some kind of unique knowledge, something the market doesn't, that justifies paying 150% premium over the fundamental value today?
That's the question. And remember, this is all AI-powered research based on the sources provided. It's not financial advice. Please, do your own due diligence.
Don't forget to like and subscribe so you never miss another deep dive. Like and subscribe to Stock Analytics AI.